Hey everyone, welcome back to Corporate Decoder. Today we're diving into AMC Entertainment Holdings, Inc.'s latest proxy statement. Get ready because this filing reveals some pretty interesting moves the company is planning. We're going to break down exactly what they mean for you, the shareholder, and what the company is really saying with all that corporate jargon. If you appreciate getting straight insights from these complex corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these filings even further and discuss what it all means. So AMC is holding its annual stockholders meeting on the 10th of December 2025, and this document is essentially the invitation and the agenda. They're asking shareholders to vote on a bunch of really important changes to how the company is run and how its shares are structured. First up, they want to declassify the board of directors. Right now, the board is split into 3 groups and only one group is up for election each year. This is called a staggered board and it makes it harder for shareholders to change the board's makeup quickly. The company argues this provides stability, but many investors see it as a way to entrench current board members. They also want to shorten all current director terms to expire at this upcoming meeting, essentially resetting the board. And they want to remove restrictions on the number of directors, letting the board decide that this proposal got strong support last year but didn't pass due to not enough shareholders voting overall. The company is hoping for better turnout this time. Depending on whether Proposal 1 passes, shareholders will vote to elect either 10 directors for 1-year terms or 3 directors for 3-year terms. This is a pretty significant point because if they declassify the board, all directors will be elected annually, giving shareholders more direct say each year. They also want to get rid of the rule that prevents stockholders from taking action without a formal meeting through written consent. This basically means shareholders will have an easier time proposing and voting on important company matters outside of the annual meeting. It is another move towards giving shareholders more power. This also failed to pass last year for the same reason as Proposal 1 lack of overall participation. Next, they are seeking to remove the limitation on stockholders being able to call a special meeting. Currently, only the board can call special meetings. If this passes, shareholders owning at least 20% of the voting power could request a special meeting. This is a big one for shareholder activism, allowing for quicker action on crucial issues. Again, this proposal saw strong support last year, but ultimately failed to pass due to low shareholder engagement. Now, this one is technically about increasing the number of authorized shares. Currently, they have very few unreserved shares left. The stated reason is to allow for the exchange of certain debt, specifically their senior secured exchangeable notes. This is important because if they can exchange debt for equity, it can lower interest payments and help reduce their overall debt. Without this, they could face higher interest costs, estimated at around $35 million annually, and a penalty payment of $15 million. This proposal could also give the board more flexibility for future corporate needs like raising more capital, making acquisitions, or providing compensation. However, it also means more shares can be issued, which could dilute the value of existing shares. The company claims this is not an anti-takeover measure, but it does give them more flexibility to issue shares, which can be used for that purpose. Proposal 6 is pretty standard. They want to ratify Ernst & Young LLP as their independent auditor for 2025. This is usually a formality, and the company states they haven't had any major issues with them in the past. Proposal 7 is the say on pay vote. It is a non-binding vote for shareholders to voice their opinion on executive compensation. Last year, this vote received only about 39% support, which is really low and indicates shareholder dissatisfaction. The company acknowledges this low support and has engaged with large stockholders to understand their concerns. They've made some adjustments, like reducing the CEO's equity grant and holding base salaries flat for him. They also mentioned that industry volatility and strikes made setting long-term compensation targets difficult, which is an interesting point. Finally, Proposal 8 is a sort of a safety net. It asks for approval to adjourn the meeting if there aren't enough votes to pass the other proposals. This gives them more time to solicit additional votes. Let's look at the financials for 2024. The summary compensation table shows the pay for their top executives. For CEO Adam Aron, his total compensation in 2024 was around $11.3 million. This is down from nearly $25.4 million in 2023 and $23.7 million in 2022. The big drop is mainly in stock awards. For the other top executives, their compensation also saw decreases from previous years, but remains in the millions. For example, Sean Goodman's total compensation in 2024 was about $4.7 million, down from over $6.7 million in 2023. Now, when we look at compensation actually paid, which is a specific accounting measure, the numbers get a bit more interesting and highlight some of the complexities. For 2024, the compensation actually paid to the CEO was about $10.4 million, and for the average of other top executives, it was around $2.4 million. Both of these are significantly lower than in previous years. mirroring the general trend in reported compensation. The report also shows total shareholder return, or TSR. In 2024, AMC's TSR was quite low at 10.25%. This means if you invested $100 at the end of 2019, your investment would be worth about $101.66 by the end of 2024. Comparatively, their peer group had a much higher TSR of over 101%. This big difference suggests that investor returns for AMC have significantly lagged behind their competitors over this period. Looking at adjusted EBITDA, which is a measure of operational profitability, AMC reported $343.9 million for 2024. This is down from $454.3 million in 2023. While it is a positive number showing they are still generating profits from their core operations, the decline is notable. However, when we look at their net loss, it was $352.6 million for 2024. This is an improvement from a loss of $396.6 million in 2023, but it still means they are losing money overall. The discrepancy between positive adjusted EBITDA and a net loss is common in capital-intensive businesses like AMC, where things like depreciation, interest expenses, and other non-operating costs can significantly impact the bottom line. Their free cash flow, meaning the cash left after paying for operations and capital expenditures, was negative $296.3 million in 2024. This means they are burning through cash, which is a key risk for any company, especially one with significant debt. So what is the story here? AMC is clearly navigating a challenging environment. They are making moves to give shareholders more power, which is generally a good governance sign. However, the financial performance, particularly the net loss and negative free cash flow, remains a significant concern. The proposed increase in authorized shares, while presented as a way to manage debt, also gives the company a lot of flexibility that could impact existing shareholders. The low support for the say-on-pay vote last year highlights shareholder sentiment about executive compensation, and it will be interesting to see if the proposed changes improve that. The company's strategy seems focused on survival and managing debt in a tough industry. But the path to strong profitability and shareholder returns is still a long one. Alright, that is our breakdown of AMC's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description, where we'll continue this conversation. Thanks for watching, see you next time.